Hello and welcome to the Thursday trading session right here in Lagos, Nigeria. Very rainy day right here. Coming up in the next 55 minutes. Nigeria's latest inflation signals a slower pace of rise. Impact the April CPI data later on the show. Next was urged Central Bank Monetary Policy Committee to suspend rate hikes as MPC meeting nears. And data shows that Kenya's debt shaming among digital lenders down 75% on the new law. And it's great to have you join us. I'm Ladi Williams. Let's kick off the show now with the market, starting with the global oil market. We see oil prices extended gains from the previous session on signs of stronger demand in the U.S. And definitely we're seeing the CPI data in the U.S. looking better, aligning with the forecast from economists there. $82.05 a barrel, that's what we're seeing for Brent, 0.5%. 0.5% rise there for Brent. Then for the U.S. version, we see $78.63, 0.8%. A bigger jump there. That's for WTI crude. Let's get a check on the metals market. Now we see gold not looking so good, 0.34%. That's for the bullion, $2,386.70 per ounce. But silver marginally up 0.02% in trade. $29.73 per ounce. And we see palladium managing to get back above that $1,000 mark, $1,013 per ounce, but still down 0.20% in the early trade, and that's today. And talking about rate hikes, it's definitely all about inflation. Right now, we see experts already reacting to the latest inflation reading by the NBS. And one of them is the Center for the Promotion of Private Enterprise. He believes persistent inflation in Nigeria remains a major concern, affecting purchasing power and business costs. The CPP recommends that the CBN Monetary Policy Committee pauses its tightening measures to help businesses recover, while fiscal policies tackle the supply side inflation factors. And the Nigeria Employers Consultative Association has created a forum for young job seekers to meet with potential employers in Lagos. The Job and Employability Fair 2024 exposed the youth to what employers look out for in CVs, composure and comportment during interviews. They were also given minutes of interaction with representatives of potential employers. From the intersection, employers will choose candidates for proper interviews in 2 weeks. Take a listen.
What we do is to ensure that businesses in Nigeria continue to be sustainable. And when they are, they create an environment that is conducive for every one of us. Now, the program we're holding today is to connect the tomorrow of Nigeria to the opportunities that abound, such that it's not all about I have gone to school. Many of them, what you have in this room today, there is no single one of them that will be able to access them beyond the kind of gathering we have put together. So what we have done is to bring all of these people together, all the employers together in a room, and give opportunity to these young ones to have access to them. Many of them have been sending their CVs to these organizations and nobody will attend to it. But on a day like this, you have those companies present all around here and you have access to them.
And the latest data from the NBS shows that inflation seems to be decelerating, as we see it peaking from February 2024. If you look at the data there, we see from February, food inflation, that rose about 3.79%. Then we saw a drop there to about 3.62% in March 2024. Then back to April, we'll see 2.50% rate of increase. That's for food inflation, even though it's still at about over 40% at this point. For the headline inflation, we also see that deceleration from February 2024, 3.12% from February, and then March, we had 3.02%. percent. Then into April, 2.29%. And we see the same trend with the core inflation, just a snap there for the core inflation when we look at from February to April. Just March had an uptick compared to February 2024. Well, joining us now to unpack this is Gospel Obele, Chief Economist at Streetnomics. Joining me via Zoom from the UK. Great to have you, Gospel.
Hi, Ladi. Good afternoon. Thank you so much for having me. Really
right.
Great to be here again.
Yeah, great to have you. It's a rainy day right here in Lagos, but we have the inflation data. It's rising at a slower pace. What do you think is helping this? I guess we're trying to count our blessings here, even though it's still high.
Yes, I mean, either way, it's still rising, and that's the concept of inflation rate. It doesn't necessarily tell you that prices are dropping. It just tells us that prices are rising but at a slower rate. So either way, it's still a very price-stricken economy and very strong prospect for a hike in the cost of living crisis as we go on. It's just that prices are now increasing at a much slower rate. And this was likely part of the projections we had as per outlook, into the month and earlier in the year, that the constant interest rate hikes, whilst the benefit or may favor investors market or financial services as the case may be, it's a weakening further down the line in terms of the cost of living impact for the average Nigerian and the cost of doing business. I've also seen that, structurally speaking, whilst inflation has been brought down in more developed economies with the use of interest rates, it's sort of a bit trickier in Nigeria, given our structural deficits and the challenges we have more structurally in terms of ease of doing business, in terms of being a high import-stricken economy, in terms of the exchange rate dynamics and all of that. So, So yes, while it's a positive to see that month on month has been dropping, it's really not much of a significant impact on the cost of living dynamics, taking into consideration the central bank constant increase in interest rates.
So definitely we've seen, about over 600 basis points hike for the first quarter of 2023. So is this what is helping, slow the pace of rise, really?
Well, it's fair to say that what I think has sort of slowed down the pace of that rise has been more or less the central bank interventions within the cost factors in the economy, starting with the exchange rate and the state of the currency. And that central bank involvement has more or less become sort of trying to moderate the market than an appreciation of the currency. And in the context of moderating the market, we've seen how that has been able to buy us time. It doesn't necessarily mean that there's been any structural or policy reform to sort of help pace that increase in prices as it were. So I would be surprised if month on month going forward into the coming months of 2024, we begin to see a further increase in month on month percentages. And that's because we've seen again that the exchange rate has gone back to what it was earlier on in April, prior to the central bank heavyweight involvement and all of that. So we've clearly seen that the Nigerian economy is more or less in need of more structural and sustainable solutions that could also impact on inflation and the cost of living dynamics. Whether the price of goods and services are increasing at a slower or faster pace, it still pinches the average Nigerian across the basic necessities and need, all right, to get by on a daily basis. And that's where I think that, policy reforms have to get to in terms of its impact and it being able to scale improve standard of living for the average Nigerian.
Right, we definitely hope to start feeling it when we go to the markets to go buy goods. But what are you expecting for the next MPC meeting? That's coming up next week.
Well, like I said for at the previous MPC meeting, that the quote unquote the more intelligent or institutional context thing to do is to hold rates or drop rates. But the more politically correct solution will be to raise rates, and which has not happened. All right. So again, I'll still stand for the fact that rates need to be held or dropped. But I would not be surprised if they increase, but I would expect them to be held because in this case, the central bank needs to be able to focus on other elements that impact on the cost drivers of the Nigerian economy, working more closely with the fiscal authority. We've not seen much of that than having to increase interest rates. I think a further increase in interest rate would impact on the Nigerian economy negatively, especially when it comes to access to finance and the cost of production or cost of doing business and the cost of living for economic agents.
Right, definitely be watching out for what happens next at the next for the next MPC decision. Some are saying maybe 150 to 200 basis points hike, but we'll definitely see what the CBN does next. Thank you so much for coming on. That was Gospel Obele, Chief Economist at Streetnomics. Thank you so much.
Thank you.
All right, we'll take a quick break now. When we come back, we unpack the AfriInvest research on the telecoms industry in Nigeria and globally. That's at the moment. Stay with us. Welcome back. Well, to our next conversation. Now, recently, AfriInvest Research released its Nigerian telecommunications sector report. It's titled Traversing a Familiar Terrain. This report highlights the geopolitical and macroeconomic headwinds faced by both the global and domestic mobile network operators in the industry. Well, joining me to discuss this now is the author. That's Benedict Egwuchukwu, an investment research and associate at AfriInvest West Africa Limited. Great to have you on the show. All right, so we see the report is titled Traversing a Familiar Terrain. Okay, can you tell me more about this title?
Okay, so basically, when you take a look at the title, what we actually did focus on was what happened in 2023. And we're able to tie the circumstances that befell the telecom sector back to also what happened in 2016. If you do recall, in 2016, we actually did have a recession as a result of declining global crude oil price, and this led to, poor country revenue and economic stability. And this also within 2016, what we also noticed was the flotation of the naira. And because of the devaluation of the naira currency, we saw a spike in inflation from an average of around 9% in 2015 to an average of around 15.62% in 2016. And what this caused for the mobile telecom operators at the time was an increase in capex, their operating expenses, as well as their net finance costs. Now, if you take a look at what happened in 2023, the same similar situation that took place in 2016 also reoccurred in 2023, only at a more diverse and devastating situation, in that we saw heightened inflation that was primarily observed because of the new market reform that was implemented by the new administration, that is administration in May 2023. And what we noticed was that when the fuel subsidy was removed, as well as the collapse of the I&E window to the NAFEM rate and the introduction of the willing buyer, willing selling model, we noticed a 49.1%, if I recall correctly, unfavorable movement in the exchange rate currency from a close of 461.50 kobo at the end of 2022 to 907 naira 11 kobo at the end of 2023. And this actually underpinned the upward pressure in cost of doing business, not just within the Nigerian and the telecom space, but also the Nigerian economy. And in particular, capex, opex, and finance costs actually surged, which with the FX losses as well. So that's actually what spiraled, or should I say, spurred the tide to traversing a familiar terrain.
Yeah, I guess quite familiar there. But in the global space, what can you tell us about performance of the telecom industry, especially among the MNOs?
So similar to what we saw in the global economy on a broad scale with the moderation in global growth output, the same thing also happened within the global telecommunications space, as we noticed that, although we saw an increase of about 10% year on year compared to what we saw in 2022 of about 15.3%, we actually did see a moderation. Now, if you take into consideration the global telecommunication industry space, there are three key categories. We have the direct, which makes up the mobile ecosystem, the indirect, as well as the productivity gain. For a couple of years now, productivity gains continue to drive growth in the global telecommunications space, although it declined last year by 1.1% to around $3.5 trillion. And if you take a look at the indirect space, it actually grew by about 35.3% year on year to around $690 billion. And then if you take a look at the direct, which is the mobile economy, mobile ecosystem, it further breaks it down into three key areas. The mobile network operators, also have the infrastructure services, and also have content. Now, if you take a look at that space, you find out that of all three components, the mobile network operators actually struggle to turn out much more revenue in the previous year. For the infrastructure and equipment and content and services, what we actually saw was a 71.2% year-on-year increase. But for mobile network operators, we only saw a mere 1.5% year-on-year increase, around 660 billion. And this was just as a result of the mobile saturation in high-income economy, the high investment costs, spectrum availability, the cost of devices soared up, and then we also had some poor price tariffs, and then competition from over-the-top services as well.
Right, and back here, I'm bringing it back home. Some of us are having to deal with, a lot of drop calls at this time. The data services, they don't seem really stable, at this time. Talk to us about this. Is it due to the macroeconomic headwinds these companies are having to deal with?
Yes, exactly. That is actually correct, because if you look back in 2023, what we noticed was that inflation affected pretty much every single industry. There was no industry that was spared. And in particular, the telecommunication industry was hit by the crash course episode of Q1 2023, the fuel subsidy removal, like I already mentioned, and the FX liberalization. All of this actually did affect the domestic space. And because of this, what we noticed was just an 8.9% year-on-year increase compared to the 10.7% increase we saw in 2022. And then this growth that we actually saw was because of, the moderation we saw in the growth was because of the upcoming FX losses that was experienced, as well as some security concerns when it comes to the vandalism and theft of telecommunication infrastructures. And the one we also saw recently earlier this year, which had to do with the cables underneath the international oceans. So all of this actually make things quite difficult for telecommunicator operators to actually operate efficiently within the ecosystem.
And gladly, I guess they've been able to solve those under cable issues at this time. They did release a statement earlier, I think it was sometime earlier in the week. But
yes,
we know the Buhari administration unveiled the Nigerian National Broadband Plan, that NNBP, is expected to run between 2020 and 2025. But less than 2 years left at this point. What have we achieved so far with the plan?
Okay, just to give a little bit of recap, the plan, and that is the Nigerian National Broadband Plan, was actually an upgraded version of the 2013 plan, which expired sometime in 2018. And this was introduced in 2019 to carry on towards 2020 to 2025. And its purpose was just to accelerate the digital inclusion, economic growth, and social development through improved broadband connectivity. Now, if we take a look at where we were at the end of 2023, at the time, broadband subscription actually rose by 4.8% year-on-year to about 94.8 million subscribers, and that actually represents 43.7% penetration rate. But looking at the data that came out for Q1 2024, what we've noticed is that the 94.8 million subscription rate we registered at the end of the year last year actually has fallen again to 94.4 million as at the end of Q1 2024. And this actually reflects a penetration of about 43.5%. Now, what this suggests is that because the target currently is 70% for the year 2025, and you can see that there's a whole lot of gaps still left. And the reason behind this is just the inadequate infrastructure development that we'll be facing currently in the country, the funding constraints, the regulatory bottlenecks, like the taxes for cybersecurity attacks that we've been experiencing. All of these have actually impacted the telecommunication sector, as well as the NCC's efforts in driving the NNBP plan moving forward. But that is not to say that there's not been a lot of progress being made since 2018 up until this point. It's just that currently, as we speak, if you look at the target of 2025, it may be possible to hit that 70% margin.
All right, let's look at some of the performances now of the listed telecom companies. We see MTN, Airtel, Africa, both posting profit after loss between about 137 billion and 63 million dollars. And definitely, we know this devaluation issue keeps impacting these companies, and we keep seeing it in the results. Talk to me about these numbers.
So if we take a look at MTN's financials for 2023, what we did see is that they were able to actually perform in a good position when it comes to the top line. They had a growth of about 22.7%. When we take a look at their OPEX and net finance costs, we saw a surge of about 3.2% year-on-year for OPEX. And then when it comes to net finance costs, we actually saw a surge of about 341.9%, about 951.5 billion, which was actually the underlying factor that led to the loss before and after taxes. And if you take a look at that 951.5 billion naira, you find out that 740.4 billion of that was actually FS loss, while the remaining 236.9 billion was from finance costs. And this actually speaks to the devaluation, the naira devaluation, and its effect on the telecom operators, specifically MTN, for 2023. And it only gets worse because in their Q1 2024 numbers, we did see a much better performance on their top line with a growth of about 32.5% year-on-year. But when you come back down to the OPEX as well as net finance costs, what we actually did see was net finance costs soared by about 1,600% thereabouts, and the FX loss accounted for about 87.5% of the total number. That was around 654.4 billion naira, and this actually brought to a total loss of around 392.7 billion. Now, earlier in the year, MTN had actually, kicked off a plan to see how they could help the current situation as well as their balance sheet positioning. And some of the things that they've highlighted moving forward to ensure that they're able to recover from the devastating situation they find themselves is actually to get an approval for tariff increase, as well as optimize their CapEx and review existing tower lease contract while trying to reduce their FX exposure, especially in terms of letters of credit. And as at Q1 2024, what we have noticed that they have actually made a breakthrough in that part. And then for Airtel, in their full year 2024 result, given that their financial runs from March to April, what we noticed was their across board, they were impacted heavily by the Naira devaluation, given that they operate across 14 different countries. However, Nigeria was one which, pulled the country and the company a little bit downward, given that it composes of it makes up about 30% of its entire revenue system. And because of that, we saw revenue fall by about 5.3% year on year. And then in terms of the exchange rate that was applied, given in the fiscal period it runs in, the exchange rate compared to MTN, which had a 907 Naira devaluation, and Airtel actually had 1,303 Naira devaluation. And this actually what led to the 63 million loss we registered at the end of the year for Airtel. Now, moving forward, we actually believe that Airtel is in a much better position compared to MTN, given its strong balance sheet position as well as cash and liquidity situation to actually sustain itself across the market. However, looking at what we've been seeing in the exchange rate, at least in the second quarter, in the first quarter, we noticed exchange rate fell to about 1,600 thereabout, and as of Tuesday, we noticed exchange rate was already around 1,520 naira, which actually spells more disaster for telecommunication players within the space.
Yeah, definitely. The volatility in the FX market is definitely telling at this time. But, they've been clamoring for, tariff increases at this point. And I'm wondering if the regulator is going to allow, the telcos increase tariffs, at some point, if they'll have to bow to pressure. But in a few words, just tell me what you're expecting.
So it will be quite difficult given, the current state of the economy at the moment. I mean, this was something that was tried back in 2016. And given that consumer spending is already pressured at the moment, it would not really make sense for operators to want to increase tariff and, put more pressure on the consumer side of the scale. But at the same time, if the mobile telecommunicator operators cannot get this tariff approved, it may actually be quite difficult for them to be able to turn out that margin that is required for their investors.
Right, we'll keep tracking that. Thank you so much, Benedict Eguchukwu, Research Associate at Afrinvest West Africa Limited. Thank you so much.
Thank you very much, Adam.
All right, we'll take a break now. When we come back, we'll head straight to the market. Well, it's rainy trading right here in Lagos, Nigeria. We'll find out the details soon. All right, let's head straight to the markets now. And Ini is going to be giving us the details for this rainy trade, if you call it that. I didn't expect the rains to be so heavy today, but
yeah, well, it didn't change the sentiment at the market, so I guess it doesn't.
Wow.
It doesn't really matter. It only changed your temperature and perhaps what you're going to wear.
Yeah. Exactly.
But the market is still red. It's still red.
Even with the rains.
Even with the rains. All right, good afternoon, everyone. Welcome to the market segment of Business Incorporated. We start from Nigeria, starting from home, is customary. The NGX is down 0.14%, and we're still struggling. I hope we do not lose this 97,000 at the close of trade today, because it's really slim here, 97,250. Looks very slim. And we'll find out soon to see if there's a change in the tide of the market as there's a change in the weather. But for South Africa, they are looking good, 0.37% at 79,000. sustaining this for a bit, 79,654.13. We look at other markets in Egypt, it's also positive for Egypt, even better than South Africa, 1.54% at 25,706.27. Kenya closed yesterday, very slim, very dangerous. But I mean, the good thing about Kenya is, we're always talking about how they went from 96, 97, and then hit 100 and went back. They've been able to sustain this 100 level for some time, 108.98. I wish we could also sustain 100,000. Before we head over to the other markets, let's have joining us, Mr. Kimoladu, to tell us what's going on in the markets at this time. Good afternoon, Mr. Kimoladu. How is the market? Should we expect to end in the red?
Yeah, so we have less than an hour to go, and currently the market is in the red. The market is even further down than the number you mentioned. Currently, the market is down by 0.24%, and some of the contributors to that red we are seeing is FCMB currently is down by 9%. First Bank is down by about 5%, and PZ is down by about 3%. On the Guinness chart, we have some penny stock there that may not be able to turn the tide of things as we move towards the end of trade today.
So even our most liquid counter and favorite, which should move the markets, I mean, as you said, it's just about an hour or so. I hope we just don't lose the 97. That would be heartbreaking again today.
Yeah. We a couple of things that are happening in the market actually showing the direction. We've seen a lot of numbers coming in. I mean, Q1 numbers, and some of these numbers are very good, especially when you look at the financial sector, the banking names. We've seen a very stellar performance numbers from them, but that has not been able to actually turn around the tempo in the market. Since the beginning of the month of May, we've seen the market tanking day after day. But we believe that at a point we'll see the bottom of this and things will turn around for good.
Yeah, and we had inflation numbers yesterday for Nigeria. We see the rate of increase reducing. Someone has said that perhaps inflation peaked in February and we should be seeing deceleration from this time. There's MPC next week, Monday and Tuesday, where we do have CPP asking that interest rates be held. Do these feed into the actions we see in the market by investors?
Yes, for sure. All these numbers actually impact the market, but most of these numbers already been priced in. If you look at the inflation numbers, those companies that are listed in the consumer goods and industrial goods, they are impacted by these numbers. You see their finance costs increasing seriously. The person that you interviewed last that spoke about the telecom sector, he mentioned that the finance cost is actually going up for some of these telecom companies that are listed. Same thing apply to some of the industrial and consumer goods that are listed. We see finance cost, we see the exchange rate actually impacting negatively on their numbers, and market has been reacting to that as we see them.
So do you see a recovery of the NGX, which could be to the detriment of the fixed income market? Do you see that happening soon?
So for now, we are seeing a lot of negative forces in the markets. The banking, as I mentioned, that are actually bringing out good numbers that's supposed to actually drive the recovery that the market is expecting. They are actually preparing for the recapitalization that is coming up. So even investors, as you know, that the market is currently dominated by local investors. Even investors are like on the sideline watching whether they can actually pick some of these names. Though, as I've mentioned, their numbers are very good. Their Q1 numbers are very fantastic, but they are just waiting whether they can pick at a very decent price when the offers are out, because they know that most of them will be coming at a discount to whatever price the stock are trading. So most of them are waiting on the sideline to actually pick this when whatever offer they are coming out with will come out.
Yeah, Mr. Akinmoladu, I'm sure there's no need to ask. We expect a red market at the close of trade today.
For sure, as it looks, except I'm not sure. All the big names that can actually turn things around, they are not on the gainers chart as I'm talking to you, and I don't see them coming to the gainers charts even before the end of close of market today.
All right, thank you so much, Mr. Richard Akinmoladu, equity trader with CSL Stockbrokers. Thank you for sharing your views with us. All right, now let's head to other markets before Ladi drives me away from here. In the Middle East, Abu Dhabi is in the green, 0.11% at 9,030.97. Dubai is on the flip side, 0.22%, 4,084.18. Saudi Arabia and Qatar are doing well at intraday, very comfortable, above 0.5% gain at intraday, 0.61 and 0.65% for both markets. We go to other regions. I think we go to Asia at this time, where the Nikkei has sustained that momentum, keeping trading above 38,920.26 after gaining 1.39%. Kospi, oh, this is where Nigeria should be, I wish. Kospi is also green, 0.83% in the green, 2,753. Hang Seng Index, 1.59%. I guess every market has its time, so let's stick to ours. Let's look at the other markets. Shanghai, S&P, they're also doing well. And it's important to know that this is reaction to that U.S. inflation yesterday that came out better than expected, not as hot as was expected. So markets are reacting, investors are reacting to that. The hope of a cut on interest rate beginning soon. I think September is what about 65% of analysts are putting it is one driving force to this. From Asia, we head to, yes, that's a big market, the United States. Well, if Asian market can react positively, we do expect a green market. The features are all green for the United States. The Dow Jones, 0.05%. S&P, same thing. NASDAQ, 0.15%. A lot of hopes coming up there. That consumer price index, broad measure of goods and services cost at the register increased by 0.3% from the prior. I think it was expected to increase about 0.4%, but we saw a 0.3%. So, I mean, Dow Jones did predict that it would increase by 0.4%, but we didn't see that much. So there's a whole lot of optimism coming up from this. Looking forward to that interest rate cut. But don't forget, we also have our own MPC meeting. Maybe that will move the market very soon, Ladi. I always tell you that I hope that one day we'll analyze this global market and say, oh, it was because of the MPC decision in the last meeting, or because of the inflation numbers, for last month. That's what moved the market. I look forward to those days.
Exactly.
After all, Nigeria is the giant of Africa.
Exactly. And, it's quite interesting, the inflation number we got for yesterday, that's for April. Even though it's high, we're seeing a slow, when in the rate of rise. But we're not seeing investors react to that yet.
And
I guess they're not happy enough.
For the U.S. inflation, even Asian markets in Europe, every market is reacting to that slight difference, that was noticed in the numbers. But ours, not even our market has reacted.
Right. So,
not mention Ghana or Egypt.
I'm wondering what kind of inflation drop, for Nigeria would spur investors in the equities market to come back, and leave the fixed income market alone.
Let me ask you, what level of drop will you see in inflation numbers that will suddenly reflect
Imagine we see like a 1% drop.
In our spending.
Right.
Inflation is measuring the cost of goods and services.
Right.
So I was having a conversation off camera earlier, and somebody asked me, we're celebrating that the rate of increase is reducing.
dropping.
Do we see it reflecting in our goods and services?
You know what the economists say?
Energy costs.
You know what they say? There's a lag effect, so we'll wait for that.
So how long and how big is this lag effect?
We'll wait. One day we'll have stable prices
All right.
in Nigeria. I can't wait because I don't remember what that feels like, knowing that you go to the market today and you go tomorrow and it'd be the same price.
No, I think you should just start with the numbers of, you see what a naira is going for to $1, and then you come the next day and it's still that. I remember those days, not so long ago.
Not so long ago.
We look forward to those
We're looking
days.
forward. Thank you so much, Annie, for giving us the details from the market right there. But let's take it on to Europe now. See, the European Commission is predicting slow but improving economic growth for this year and 2025. Well, let's hear more now from Chimponda Chimbelu right there in Berlin. Great to have you, Chip. So what are the highlights from the EU's latest forecast?
Thanks for having me. Well, Laddie, the European Commission expects the bloc's economy to grow slightly higher than it previously predicted in its forecast in February. It has upgraded the projected GDP growth this year to 1% from 0.9%. And it also expects 2025 growth to come in 1 basis point higher at 1.7%. Despite strong employment numbers and wage growth in the bloc, European households have been saving a larger share of their disposable income rather than spending it. And that has weighed on growth. Despite that, there is some good news on inflation. The European Commission expects quarterly inflation to reach the European Central Bank's target of 2% slightly earlier than initially predicted during 2025. Now, that's also when the EU Commission expects average real wages to recover to their 2021 levels. Now, 2021 was when inflation gathered pace in Europe and started eating into real wages.
So how are the trends shaping up in different countries in Europe?
Well, the European Commission has a bleaker outlook for the 20 countries that are part of the single currency Eurozone. It has slightly lowered the growth for this year to 0.5% for the region. And while all the countries in the Eurozone are expected to return to growth this year, the economic expansion in Southeastern Europe is outpacing growth in Northern and Western Europe. The highest growth is expected in Croatia, where the GDP is expected to grow more than 3%. And growth in the Eurozone's 3 biggest economies, which are Germany, France, and Italy, will be less than 1% this year. Europe's industrial giant, Germany, is dragging down the whole region. It is expected to scrape through with 0.1% GDP growth this year after narrowly avoiding a recession in the first quarter. Now, an independent group of economists that advises Germany's chancellor also released its spring report on Wednesday, and its outlook was only slightly better than the EU Commission's. It expects the German economy to gain some momentum over the course of the year as inflation continues to fall.
All right, what can we expect from the markets today?
European markets are expected to be little changed today, Laddie. Now, that comes, of course, on the back of positive inflation data from the US, which sent Germany's blue chip index, the DAX, to a record high on Wednesday. American consumer prices fell in April after rising in February and March. The downward trend boosts expectation for a Fed interest rate cut in September. There is not much economic data expected today, but investors will be on the lookout for the European Central Bank's financial stability report. It is likely to focus on the consequences of sustained high interest rates, and of course the potential impact of increased geopolitical tensions. Also, here in Germany, industrial giant Siemens and Deutsche Telekom released their quarterly earnings.
Right, still earnings season. Thank you so much for the details. Chimponda Chimbelu right there in Berlin. All right, let's get a check on all the stories now. We see the Federal Competition and Consumer Protection Commission have sealed one of the biggest warehouses in Ekiti State for dealing with substandard products and alteration of expiry dates of products. Speaking with journalists during the inspections and search operations in Ekiti, the state capital, Director Surveillance and Investigations, Mr. Adeyinka, says the commission received intelligence reports on alleged legal and unscrupulous business practices. Take a listen.
And the dates are valid.
The SON scan code that we use to verify the authenticity of the scan, the SON numbers, product authentication by mark, declared the products invalid, meaning that the product identification mark originally given to those products is not what is on the product in this premises. That is the second level of infraction that we have found. It suggests and it confirms that some obnoxious practices are going on within this premises that we need to further investigate. We are also aware of products, like you are aware, whose weight claims are not conforming in any way with the validities that we verified. Meaning that even where the claim of a bag of rice is supposed to be 50 kg, is way less than what is supposed to weigh. And we saw that in the batches of oil, some of them don't even have batch numbers, best before date. We also saw that the condition of the oils in kegs, it's dirty and suspicious. So we are also going to intensify investigation to identify who is producing it.
All right, well, year to date, we see the price of a bunch of plantain has surged by 85% from 3,500 naira to 6,500, much higher than our food inflation number that we have right now. That was for April at 40.53%. Let's talk to Halima Dediron, analyst at Financial Derivatives Company. Great to have you, Halima. So why is it rising faster than food inflation rate?
Good afternoon. Thanks for having me, Ladi. So if you look at plantain, Nigeria is one of the largest producers of the staple in the globe. And we produce about over 3 million metric tons in a year. But despite this, we still see that we have a spike in its price. And this is because of high demand of plantain derivatives. So in recent years, we've seen that research and innovation has really increased the use of plantain derivatives like plantain flour, which is being used for baby food formulation, pasta making, and even bread making because of the increase in the cost of wheat. So it's being substituted by some portions in order to produce this product. And so because of this, we are seeing an increase in the demand for plantain and its derivative, which one of them is plantain flour. Currently, the demand-supply gap in plantain flour is about 99,000 metric ton in Nigeria. And so this is one of the factors that is pushing up the price of plantain. Not only that, we'll see that every year between October and February of the following year is always where we have plantain in large supply in the country because that's the harvest season. But periods or months after that, there's always the off season for plantain. And because we have post-harvest loss and inefficiency when it comes to storage facility. So this has been consistent year in, year out. We always face this lack of supply in plantain compared to its demand. And not only that, we also have logistic constraints because of the high cost of fuel and the cost incurred when moving this produce from the farm gates to the market. It has really increased compared to years before now. So this also is being factored into the price of a bunch of plantain. And these are some of the reasons why we are seeing this surge and the price of a bunch of plantain in Nigeria.
Right. I guess it's coming with the signs of the times and the season at this point, and definitely the price is really high. Definitely. Do you see it coming down anytime soon?
Well, we cannot really say unless we have improvements in terms of storage facility and improvement in terms of the kind of standard. There is no standardization when it comes to the quality of plantain produce after being harvested, because that will really feed into the quality and the output that would eventually get into the market space. Then also, government have given different palliatives and different policies that are supposed to help agricultural sector in general. But if we look at FDI in agric, it has really dropped by about 78% to $19 million. Year on year from 2022 to 2023. So we have to tackle the issues, logistic constraints, and so many things, and increase commercialization and mechanization before we can really see an improvement in the supply of plantain in Nigeria.
All right. I know a lot of people that like to eat their plantain a lot at this time, but I hope the prices come down. Thank you so much, Halima Adediro, analyst at Financial Derivatives Company. Thank you.
Thank you for having me.
All right, now let's head straight to the crypto market. Now we see it deep green on the screen, and just little pockets of red right there. Even though it's a rainy trading day right here in Nigeria, but I don't think it's raining everywhere in the world at this point. But I'm looking at this board. We see the reaction to that CPI data out in the US, and Bitcoin did react to that, 66,264, up by 5%. Solana not left out, 12% rise for Solana, just little pockets of red. So we're seeing the investors in the crypto space really happy with that CPI data. Maybe we might get some kind of cut when it comes to US interest rates. That's why these markets are reacting like this. Let's bring in Rume Ofi, and this time it's not via Zoom. Rume is actually right here with me in the studio, and he's going to be approaching me right now. Great to have you, Rume. Quite interesting.
Yes, I'm here live and direct.
Seeing you on the other side,
yes,
virtually. But now this is not AI.
We're here. We're doing it live.
Right here.
Yes, live.
But looking at this board, it's really, really green, and it's on the back of the CPI data. We got from the US, obviously. So are we out of the woods yet, with this reaction we're seeing?
I think this is a sign of relief, thereabout. Sometimes when the whole everywhere is hot, when there's a turmoil, it's good that we have some green moves, and so that some persons can also take some profit for excitement, you know what I mean?
And talking about excitement, I'm not sure how excited investors in Nigeria are really now with the clampdown we're seeing on the P2P market. But I know the SEC has been having conversations with players, in the crypto space. What has come out of those conversations?
I think it's progressive. The appointment of the DG for SEC, we had a meeting some weeks ago. Very impressive meetings. It shows that this government is trying to listen to a couple of things that are happening, willing and able to do a couple of things in the industry, because the opportunities in crypto are enormous, and I don't think Nigeria want to allow that slip away, and I like the fact that they are more like saying, come, let us listen to what you have to say. Most SEC chair, I don't want to mention Gary Gensler, will not want to call industry players like the average guys, the average local players. They always like to deal with the top guys. So Nigeria is saying, come, let's have this roundtable discussion. That's what we had, and it was very impressive. Very impressive.
And at the end of the day, P2P, the Naira has been delisted from most P2P platforms at this time. How do you think the crypto investors here are navigating all of that?
Honestly, not a very easy time, right? I think it's just a phase. We're trying to see how all of this can be stable. We have to prioritize our Naira at some point. We're Nigerians, and I don't think we have any other currency but the Naira. So in all of the perception, trying to make sure all of this come, we might go through this phase, which is going tough now. It's not really funny for players involved in the P2P market, but I'm very sure because, like I say, a few times past that these current governments actually promised us that blockchain and cryptocurrency are going to be used. So we're most likely going to hold them accountable, not strangulate, but regulate.
Right, regulate.
Yes.
But definitely we know central bankers, they like to have control, of whatever technology, is going to play in that the financial system. So do you really see light at the end of the tunnel when it comes to central banks and cryptocurrency and blockchain?
So, Ladi, I think in Nigeria, central bank is more involved in the crypto part, more like in the US. You see, the Fed, we rarely hear about Jerome Powell talk about crypto most of the time. It's the SEC. So, I think we need to make certain things clear. The SEC is in charge of anything relating to digital assets, most likely. Maybe some that are commodities, that will say the commodities, futures, trading platforms, authorities. But in Nigeria, sometimes when I hear the central bank, I get really worried. But I'm very sure maybe the SEC could hold its side very well this time, because the SEC is in charge. That is why the SEC is calling stakeholders to let's come and reason together, not the central bank. The central bank is for monetary policy, and here we are in crypto.
Right. Well, we're definitely watching out for what the regulator, does next with crypto in this country. Thank you so much.
Thank you, Larry.
For coming on as roommate of the
I'm going to come
financial
more.
market analyst. Yes, definitely. We'll have you some more. Thank you so much.
Yeah.
All right. So that's it. That's the show today. It's a rainy day, and definitely we know the trades are still happening. We're looking forward to how the NGX will close for the second to the last trading day for this week. Thank you for watching. You can visit channelcv.com for more updates. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.